So what's crack-a-lackin', guys? Welcome back to the channel. Let's talk about a couple things in this video because I think a lot of people are confused, especially revolving around AMC, short sellers, and what the overall market is doing. First and foremost, I want to talk about essentially how long Citadel could afford to stay in their short positions. What would make them cover? We're gonna go over, do a little bit of math here. We're gonna keep it very simple. Go over essentially how much Citadel is paying per month to stay in their short positions. Also, I do want to talk about how if the market does come down, it will cause the short squeeze. I think a lot of people are very confused on how hedging works with hedge funds and the overall markets because there is a net neutral. So if one hedge fund is winning on a trade, one other hedge fund is losing on a trade. So it doesn't necessarily matter who is, hedging what, who is making what kind of profits. There are so many short sellers of AMC. Some will make money, some will lose a lot of money. Those short sellers that lose a lot of money will have to cover on their short positions, driving up the share price, driving up the amount of essentially collateral or interest the other hedge funds have to pay, driving up the price, so they're losing on their actual positions, as well as that the hedge funds that made money on their hedges, they will still be losing on their overall long positions when the market does come down. So that was a little synopsis of what we're going to be going over in this video, but you really have to dive into the details around this. So let's get into this video, guys. Tap, tickle, touch, or smash the like button, as well as consider subscribing to the channel if you guys get any value out of this video. So let's first talk about hedging, how this does work. And the first thing you guys got to know is that hedge funds are not going to go hedge crazy until they can confirm a crash is happening. So they're already going to be substantially down in their portfolios before they do put on massive hedges. Imagine if you're a portfolio manager of $10 billion of assets under management, you are not going to put $1 billion or 10% of your portfolio into hedges when historically the last 18 months we have bounced off the 50-day and the 100-day moving average, which we have since done right now. So there is hedging going on, but not enough hedging to account for a 15, 30, 40, 50% drop in the markets, say theoretically, if the debt ceiling is never raised. So that's what you guys need to know. There will ultimately be a huge net loss if the markets do substantially go down. It does not matter what hedging is done. Let's get that straight. But when it does come down to hedging, hedge funds are hedging essentially against other hedge funds. The big players, you're going to have some winners, some losers. The easiest way to think about this, and it is a net neutral, right? One's losing, one's winning. Easiest way to think about this. Imagine me or you. I bought a $40 call on AMC. You sold me a $40 call on AMC. Let's say AMC is now $50 per share. I am up $1,000 on that trade. You are down $1,000 on that trade. It is a net neutral. Hopefully that makes some sense to you guys. Like I said, it's not going to matter who hedges what. If the market goes down 20, 30%, every hedge fund is going to be down somewhat, unless you're a smaller guy, right? You have a couple, $100 million of assets under management. You put 5% into hedges, you caught it perfectly, then you're going to be substantially up. But we're talking about bigger guys. They're not going to be able to do this. Overall, they're going to be down in their portfolios quite substantially. And like I said, there is currently 91 short owners of AMC, and odds are most of them would lose a lot of money. So that's what you guys need to know from that. Hopefully all this makes some sense to you guys. Now, when it does come down to the Fintel data, we don't know necessarily who is actually short on shares. We know who is short on puts because they do have to report that, but the shorted shares do not have to be reported. Some firms, they do actually report how many shares are shorted, as you guys can see right here. These three right here, they do report that they are short on shares, but they do not have to, and majorly speaking, they do not report that. But let's talk about directly Citadel, and this is where we're going to get into a little bit of math. But first thing you guys really need to know, especially revolving around the markets coming down, them having to be forced to cover, comes down to their portfolio values. $446 billion. They could buy AMC 10 times over. They're not going to have to cover on their short positions if the markets never did go down. And we're going to really break this down with a little bit of math that we are going to do right now. So you guys can see right here, they have shorted $476 million worth of puts. And like I said, they don't have to report how many shares are sold short, but I would imagine since they are a hedge fund, it is about the same. So let's just round it up to $50 million worth of shares that are shorted. Now, as we do know, short positions, they cost interest, they need collateral as well. But when you're trying to figure out how much the interest rate is, Ortex gives you this cost to borrow average of 1.61%. Obviously, when they took on their short positions, it was probably higher than that, as the share utilization was higher and there was more volatility in the stock. But it does say on average the interest rate is 2% and it is charged on a monthly basis. So let's break that down. That's where we're going to get into a little bit of math. So let's do 500 million times 0.02, that is 2%, that is $10 million per month, times that by 12, that is $120 million per year to stay in their short positions. They have probably been in their short positions about 6 months. So you're looking at about $60 million that they have had to pay to stay in their short positions. Now, what is their portfolio value? Let's go back to that. It is, I believe it was what, $446 billion. And $60 million out of $446 billion is like 0.0001% of the portfolio. So it's literally nothing compared to how much money Citadel does have and the essentially collateral they could put up for these short positions. Even a year's worth of holding on to their short position at 120 million, that is 1/10 of $1 billion. They have $446 billion. That is why you need the market to come down. If the market did come down, all these hedge funds are over leveraged. Say Citadel dropped 50% in value, went to $220 billion of assets under management. AMC did run up because the small shorts did start to cover. Then they would have a substantial problem on their hands and they would be way more likely to be forced to cover on their short positions. That is why we have not seen forced share recalls with the big shorts of AMC. Simply put, they have way too much money. So we're going to have to wait and see how this all plays out. I'm not trying to make any predictions, just trying to really clear the air on how hedging does work, how it is a net neutral between hedge funds and institutions. But overall, if the markets did come down, shorts would be forced to cover because, simply put, there's not enough hedging they could do before a market comes down. They don't have that kind of insight to know that the Democrats, Republicans aren't going to come to a conclusion about the debt ceiling. They just don't know that information to be able to prepare for it. So they would be just like us, caught off guard and not be able to protect their portfolios. But like I said, it's a net neutral between hedge funds and institutions. I think a lot of people don't fully understand that. So hopefully you guys got some value out of this video. Hopefully I could clear the air to you guys on some of these issues that are really plaguing some people. And I shouldn't really say it like that because it's not really plaguing some people, but hopefully you guys understand what I'm saying. So tap, tickle, touch, or smash the like button. Consider subscribing to the channel if you guys got any value out of this video, as well as let me know down below in the comment section, what do you think about all of this information? What do you think about a potential market crash causing the short squeeze? With all that being said, guys, I will see you in the next video.